May profits be upon you. Welcome to another weekly market forecast. We're looking at the US dollar index, And remember, folks, if you're looking at the US dollar index, you're looking at the inverse of the euro USD. So, if you're planning on trading the euro USD, you want to look at the US dollar index analysis and trade accordingly. If you see strength or weakness in the US dollar index, then you know what direction you got to take your Euro USD trades, as well as the other major pairs, the other currencies that are up against the US dollar, like the pound USD, the New Zealand dollar USD, the Aussie dollar USD, the US dollar CAD, the US dollar Swiss franc, the US dollar Japanese yen. All right. Now, as you can see on the monthly time frame, what do we have? Oops. What we have here is a ascending channel, right? We have an ascending channel that's making higher highs, higher lows, higher highs, higher lows. This is the potential higher low here. And what I want you to see is that we are still in at the support line of this ascending channel, and there is, I've been saying it for several months now, there is the potential for the price to head back higher. I don't know what is going on here. Get off of that. There you go. Oh, wow. I don't know what's happening here. Don't know what's going on. Don't know, don't care. All right. Let's see. So back at the Euro USD, excuse me, folks. Um, what I want you to see is that this market is at a point where it could still pop to the high, but we have to see it break this consolidation. This consolidation, the market has been moving sideways for how long now? Huh? How long? Several months, right? And but there is no. I want you to note. I just want you to make some notes here that there is no follow through to the downside right now. At this moment, there's no follow through. Back a couple of months ago, in January, we saw the market head down and hit this low, but it respected this wick that I kept pointing out. I said if when the market closes past the 50% of this wick, that would be a very bearish indication. Well, the market did go past it, but it ultimately closed above the 50% of this wick, respecting it, which is a bullish indication. All right. Also, let's make another note. When it did push past that low, all right, and made the low of this consolidation here, sweeping the sell side liquidity, it also made this wick, and I said, here's the 50% of that wick. I don't want to see the market close past that 50%. If it closes past that 50%, that would be a very bearish indication. Like I said earlier, what did it do? For the month of February, it's been bullish. It bullish so much so that last week it closed. It did not close. It closed a week, but this is a monthly candle, and it still has a few days to go before it closes. But for the week, it closed above and inside, back inside this consolidation. All right, that that's not a bearish indication. It shows the lack of bearish momentum, and it also indicates that there may be some bullish momentum going on in here for the month of February. Now that's very interesting, don't you think? Also, if we go to the weekly, what do we see? I want you to see that the market has been low, lower high, lower low, lower high, lower low, lower high, lower low. This has all been bearish up until this market closed on this week. And this was, look at the date, January 26th, right? The week of January 26th. And we've been moving sideways since then. But it is like I showed you. It did not close past the 50% of this big wick over here, and we did not get a close below the 50% of the wick it left during this week. It's been trading above it. All right. Shows signs of support for higher prices here. All right. Now, I also want you to see that last week closed above the high of the previous week. That is a bullish indication for the week ahead. The next new candle to form, I don't expect that it would uh, uh, close. Watch this. What was that? What was that? All right, I got problems here. Let me get this out of here. All right, I don't want to see the. I don't expect the market to close past. Wow, I can't get this thing straight at all. I don't see the market closing past this. I, I can't get it past. I don't know what's going on. Okay, I'm going to get rid of this and go back to the crosshairs. All right, we'll just do this. Okay. Sorry about that, folks. So I'm looking for the top of the volume, well, the bottom where the market opened this bearish candle last week. I'm looking for the market to maybe test this area, all right, before moving up higher. Why do I think it's going to test that area? Because you'll see it clearly on the daily time frame. If I can get this thing to, yeah, I'm having some technical difficulties over here today. All right, I'm sorry about that, folks. All right, I have this the bearish candle marked, and I'm looking for price to quite possibly pull back. As you can see, the pullback has already started. All right, to pull back in a shallow way. I'm looking for that pullback to happen here, and then continue up higher. There's a volume imbalance here where there's a price gap I'm talking about. All right, there's a volume imbalance. And I am also looking at is, that being aligned with the order block here. All right, this is the overall area of fair value, the order block. Okay, but this is the refined version of it. All right, because what I want you to just make a hard note on is that we have the buying candles before the stronger sell off. This is an area of fair value or an order block, a bearish one, and we could expect the market to pull up into this, especially drawn to that fair value gap. I mean that price gap at the fair at the bearish order block here, and maybe we get the buy model. I mean the sell model. I'm sorry, the sell model here, and then continue down from here. Because if you step back and look at this, you'll see that there was a lower low, a lower high, a lower low, and this could be possible lower high for the next lower low. So that's something to bear in mind, don't you think? If I can get this out of here, I don't know why it won't act right. I got to get a somebody to take a look at this thing. I'm having IT issues today. All right, so let's go down to the daily. I hope that is the weekly is clear enough, but if it's not, pay attention now. All right, you have the uh, you have the lower low, lower high, lower low, and then we have this could be the lower high right here. You understand what I'm saying? For the next move down. That's something I'm definitely giving a hard look at, and but what you want to walk away with is that the market could pull up. The market could pull up higher here. All right. So we have short term bullishness, and we may get our sell model here for the next move down. Okay. That's all I'm saying. All right. And uh, I want you to also note something here. You see this fair value gap here? It's a bearish one. The market pushed into it, fought it, and then we have this move here. We have this bullish move up, bearish move down, and then another bullish move up. That created a an order block inside of this bearish fair value gap. What does that mean? What does that indicate? Well, uh, the fact is it closed above the fair value gap. So we now are looking at a potential inverted fair value gap. And you see that there is space underneath those lows. Ha ha. You like that? Ha ha. All right. That means that I don't understand why you won't disappear. Why won't this thing act right? All right. That means that the market could be pulled towards these lows, which is why I was talking about the market could pull back into the this change in the state of delivery here. Wick below these wicks, and then give us a buy model at the inverted fair value gap and push up into this area of supply up here, this supply zone, the zone of fair value. All right. And this volume imbalance, which is aligned with it, acting as a draw on liquidity. I like this. I like this scenario a lot. Now, the bearish model is going. I want to take a trade from up here. I want to take my trade up here. Let me use a circle up here. This is where I want to take my trade. Look for a sell model. This would be the optimal area for it because this is the bearish leg. And if you use your Fibonacci retracement tool from the top to the bottom of that area, you'll see that this area is, we are in optimal trade entry area right up there. The far side of it being the 786, the near side being 618, 705 in the middle. This is where I would want to take that trade, plain and simple, to look for a sell model. Now, if the sell model doesn't appear, if the sell model does not form, guess what? I won't be taking a sell model. I won't be taking any sells. I won't short. All right. If the market starts to move in a way that looks like it's going to take out the protected high of this order block, uh, as soon as it does, as soon as we see a close on a daily closing basis above that high, this becomes an area where I would want the price to come back and test and give us a buy model to go up further. That's it. That's the way that has to work. All right. Right now, I'll be looking for that buy model right down here. All right, and take it to and TP at the volume imbalance that I pointed out on the weekly and monthly time frame. Does that make sense to you? I hope it does. All right, we have an inverted, a possible inverted fair value gap here, and I would love to take a buy model from it as soon as it comes past below these lows. All right, that would mean I would be looking for sells in the short term on the Euro USD, the Pound USD, and trade accordingly with the other majors. I hope this makes sense. I did a whole lot of stuttering and stammering, and my technical difficulties notwithstanding, I think we have some bullish indications over the last couple of weeks where the market did not close past the 50% of these wicks. Yeah, it made new lows, but it price didn't trade through those lows. All right, there was no bearish momentum. We have some bullish momentum though. It's the beginning of it, but I can see it there. So a pullback into a fair an area of supply like this bearish order block here, that's going to draw price to it. We've already hit the sell side liquidity here. Now we're going to, and we hit an external range. Look, that's external range liquidity. These lows, this low, and this low, that's external range liquidity. We're probably heading towards the internal range liquidity, and I would look for the market to push up into that order block. I hope you enjoyed it. Hey, I'm going to put out the Euro USD next, and I will see you in that video. Thank you for watching. May profits be upon you.